Hello everyone. So this video is actually for us to look at the market structure from the higher time frame perspective. Then we take it down to the lower time frame where we are going to actually execute our trade. So if you have been following my videos, if you have been watching videos like the ones I've dropped before, if you have been watching it, you'll discover that there is only one pattern I trade. You get. So today I'm going to be showing you guys this pattern, and I'm going to be showing you some secrets behind this pattern, how to take your confirmations from the based from the higher time frame, how to confirm your entry on the lower time frame. All right. So just enjoy the video. Make sure you have your books, have a handbook where you will write to jot down things that you will, just comprehensive things you understand about this very strategy, right? Then just take it down so that at your own time, at your own convenient time, you just go back to it, watch it over and over again, read those notes, and make sure you understand it. Then after that, go to your charts, backtest it like 100 times, right? Backtest it like 100 times. Don't fund your life count when you have not really backtested this strategy, right? So without wasting much of time, let's just dive in. So right now we are on synthetics, right? So this volatility 75. I'm going to show you guys how to know your market structure. You get. Market structure can be sometimes it can be difficult if you don't know, if you are new to it, right? So but I'm going to make sure that it's going to be as easy and as simple as anything. Okay, so that is what I'm going to do actually for this video. Then let's start from our 1 hour time frame. But before then, we have different structures, right? We have two types of structures. Then we have a market that is trending, and we have a market that is what? Consolidation phase, right? So when you talk about trending, a market trending, we have upward trend and we have what? Downtrend. All right. So then we have uptrend and we have downtrend. Then when we talk about consolidation, all right. So when we talk about consolidation, we talk about market that is ranging and market that is choppy. Okay. So in this aspect, we don't know exactly where the market is going. I'm talking about when the market is choppy, right? So we don't know exactly where the market is actually heading to. So because of that, we are going to stay away from the market. All right, we stay away from the market, observe the market, wait for a break of structure, wait for a retest, then we take our trade, right? So we're not going to be gambling, right? We are going to make sure we execute our trade perfectly. So having known this or having understand this now, so let's now talk about the market structure, right? Then let's go to our daily time frame. I like using daily time frame, guys. Like I like using it, except I want to swing. Like if I want to swing, I can actually use monthly or yearly, but that is not actually what I trade. Okay, so for right now, let's just use daily time frame. So this is my daily time frame. Let's reload our chart. Alright guys, I'm going to delete all these things that is here so that you guys know that I'm not just doing it, it's a skill, right? So when you look at this chart now, from this place to here, what do you observe? You observe the market is trending down. All right, so the market is actually on a downtrend. So we are going to be doing what? Looking for potential to sell. That is the only thing we are going to be doing. So then I want to show you guys very important thing about market structure, and it will take you time. Look at what you should be doing when you open your chart on your daily time frame. Take time to analyze it. Don't rush it. Don't do as if you are going to another chart or doing. Just take time to analyze that chart very, very well and understand. Have a comprehensive understanding about the charts, about that very pair that you want to analyze, right? So don't be in a haste to jump to another chart or another pair. Just take your time to analyze the chart, and that's what we will be taking you guys through on this very video right now. We all know that since the market is trending down, we are going to be having what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So in this phase, what is the market doing? The market is respecting these highs. Market is respecting those highs, right? Why is doing what? While it's breaking these lower lows. All right? So this is what the market is doing. Having known this right now, so what do we do next? Use your tool. This is lower low, right? We have lower high here. We'll have lower low here. We have lower high. All right? We have lower low here. We have lower high. We have lower low here. We have lower high. We have lower low. We have lower high. Then we have what? So we have what? Lower high here. So we are actually doing what? Expecting what? A push to the downside to break this very low. This is the last low that formed, right? This is the last low that formed. So having understood this right now, so what are we going to do? Let's zoom our chart and see exactly what market is doing. All right, so you can see this is the last low that formed. This is the last low that formed, and this is our last high that formed, right, on a daily time frame. So this becomes our what? Our swing high. This becomes our swing high. Why this becomes our what? Our swing low. So because we are on a downtrend, what are we expecting? We are expecting this swing low, this weekly low now, to be taken out, right? We are expecting this low to be taken out, okay? Then why the market is respecting this last high, okay? Why the market is respecting this high, we are expecting this one to be taken out. So having understood this right now, what next are we going to do? Let's jump down to our 4-hour time frame and see what the market is doing there. So this thing is very, very important. Do you know why it's very, very important, guys? It's because sometimes most people confuse what the market is actually doing from maybe and what internal structure is talking about. You get? So sometimes you might mistake it. You get? So because of that, you have to make sure you take out your time to do what? Analyze your chart very, very well. So at this point, we noticed that the market was bullish, right? But coming to this last low here, this is the last low that formed here, right? This is the last low that formed here. We observed that what? The structure was shifted from bullish to what? Bearish. All right? We observed that the market structure did what? Shifted. All right? The market structure did what? It shifted from bullish towards bearish. So right now at this juncture, we are going to be doing what? We are going to only selling our market. All right? So we are going to be looking for what? Potential to sell. Then let's come down again, or let me show you the structure. Let me start from here so that you guys will take our time to do the same thing on your charts. This is the higher this is the higher high, right? This is the higher low, right? This is the last high that formed. All right, this is the last low that formed, right? And at this place we notice there's a what? A break of structure around here. There's a break of structure around here. There's a BOS. We use the word BOS for break of structure, right? So sorry, we are shifting this very down to here. This is the last low that formed. Okay, so this is where the market shifted. This is where we had our change of character, CHOCH. So we had our change of character around here, right? So what next are we expecting? We are expecting what? Now the market have taken out this very low, resulting towards a change of character, right? So what we are expecting is what? we're expecting a pullback, maybe to this zone, right? Maybe to this zone, to this other block, and then we take our sell again. So what is our target? Our target is that this swing low, this is a weak low, right? That this weak low is going to be taken out. Okay, so because having known this, we know that the low is going to be taken out. Then let's come down to our 1 hour time frame. All right, let's come to our 1 hour time frame and see what the market is doing. This is top down analysis, guys, so it's not something you should joke with. All right, it's not something you should joke with. So having seen this now, what do you observe? You observe that the market is still on a bearish trend, confirming the higher time frame, right? The market is still bearish. Okay, so it's still confirming the higher time frame, which means we are correct, we are right. Okay, so this is the low. Let's spot the structure. Please pay my bills, man. So this is it, this low that take out this very last low, right? Then we have our pullback, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Oh yeah, let's see the last low. This is the last low, right? And then there's something else I want to show you guys. We are going to come back to this place. Do you notice at this place? Let me spot it so that you guys will see it very well. These are advanced market structure, right? I'm not giving you guys half baked analysis. We are doing what advanced. This advanced structure. So do you notice that I called here this place is higher low, lower high, sorry. Why? But if you look at this place, you notice that this and this level are almost the same thing. But why is it that here is still lower high? So this is the mistake that most people do when they are analyzing their charts. You get, most people make this mistake, and I want to correct it here. You look at this low that formed here, right? This is the last lower high that formed. You get, so this pullback did not break this very high, lower high. It did not break it. Had it been, we notice there's a break of structure around there, we would have known that the market have shifted, right? The market structure have shifted. But because this very place is not broken, right? So because of that, we now know that the market is still continuous, the trend still continues, right? So it's very, very important. Always watch out. And for you to know a break of structure, a proper break of structure, it must break out with what? A candle, a body of a candle. Do you understand? So it must break out with a body of a candle, or it must break and close with a body of a candle, right? Then in a scenario where it did not break with a body but with a wick, let's imagine that the first candle that formed here break with a wick, whereas the body did not break that very high, right? Then and the subsequent candle do what? Did not break there, did not break that very place. We know that that place, that very break of structure is what? Invalid. All right. So but in a scenario where, let me say, this is my candle, right? This is my candle, and I have, let me say, this is my last high that formed. This is my last high that formed. Okay. And then understand this thing is very, very important. That's why I'm taking my time to teach you guys. So let me say that this is the last candle that formed, and then the candle, the wick of the candle did not break this one, then the second candle now formed. Now second candle formed, and then the wick of the second candle closes this very one, thereby breaking this very lower high. So we consider this one what as a valid break of structure. We consider it as what? As a valid break of structure. So, but vice versa, let me say, at this place now, this wick did not broke this very high, and then the second wick not close above this very wick. We consider it as what? Invalid break of structure. So take note of this thing. It's very, very important, so that you won't make mistake while spotting your what? Your break of structure. Alright? So you won't make mistake while spotting your break of structure. Then at this place, what do we have? We have the last high here, right? And then we have the last low here, right? This becomes our what? Our range. So this is the range where we are trading from. This is the internal range. So what do we expect? We are expecting what? A push of this price to this what? Other block around here, right? So once this market pushes to this other block, what do we expect? We take the market to do what? Down. We're expecting what? The break of this low, right? To facilitate the low of the 4 hour, which will facilitate the low of the daily time frame. Alright? So remember, all we are doing is what? We are trying to break the low of the lower time frame. Alright? So this is it. Just mark out your words. Just mark out your words, your other block, and then wait for price to do what? Mitigate this other block. Once the price mitigate this other block, then you take your trade. So right now, I don't know the kind of thing you use for your what? For confirmation, right? But what I'm saying is, in essence, is I don't know, but you can still use anything that you can use to do what? To confirm your entry at this very point. Alright? How? So what you do is, for me, I use a particular pattern to trade, right? Since the market is reaching this other block, what I'm expecting is what? A push of price to the upward on the lower time frame now, then a break of structure, then creating something like an other block, right? Then the market will give us some sort of liquidity, then it will come back to this other block, then we do what? We take our trade. So this is the only pattern I use while trading. This is the only pattern I use anytime I'm trading, right? So it will give me a sort of liquidity around here. This will kind of be like a trend line liquidity. A trend line liquidity. And you guys know now, this is what is kind of inducement, right? So if you're the type that trade inducement only, you can still take this trade. All right. So this is what formed. All right. Then we had our markup around here. So for me, I use only 50% of my Fibonacci retracement to take my trade, right? I just take trade from the sniper level, all right? So this is it. What we had our liquidity around there. So right now, let's use a dollar sign for what? Liquidity sign, okay? It doesn't matter what you are using, but just know that is what is liquidity. And then we had our break of structure, our BOS. Then our BOS around there, right? So this thing supposed to give us another second break of structure. All right. because this is the pattern I trade, right? I trade this pattern all the time. I don't deviate. This is the only pattern I trade. So this is the second break of structure. Then we wait for price to come back to our other block, then we take our trade. So for me, I target 1:8. I target 1:8 in each of my risk. I make 8% of it. So sometimes on a wing trade, on a swing, like right now, this is a swing setup. We can still use what? Risk as much as, like, take as much profit as you can, all right? But don't be greedy on this market. You get, there will always be another chance, all right? Don't be greedy. Just take your risk to reward. Make sure you are consistent with that risk to reward. So make sure you're consistent with it. All right. So right now, this is the only pattern I trade. All right. So this is what I'm waiting for right now to happen on this other block that I'm waiting for. This other block right now, this is exactly what I'm waiting for. And you can see, guys, this kind of liquidity around there, and confirming my setup, giving me a kind of break of structure. Then with this other block, then another pro tips I'm going to give you guys for free. You see, when you are analyzing your charts, if you are using 4-hour time frame, 4-hour time frame, your confirmation should be from what? 15 minutes. 15 minutes time frame, all right? Then if you are using 1 hour time frame, right? Your confirmation should come from where? From 5 minutes. 5 minutes time frame. So this is how you should be doing it. When, like, for instance, now we have our other block for 1 hour, right? So we are going to be using what? 5 minutes for our confirmation, for entry, right? Sometimes when the confirmation form in 5 minutes, you can still step down to 1 minute, but that doesn't make, like, it's still the same thing, all right? So in case if you want to tighten your stop loss, you can still use 1 minute, but for now, this helps, all right? So I hope you guys will enjoy this video. Make sure that you use your pen and your paper to jot down everything I just taught you guys right now. You don't need any other information aside from this, right? You don't need any other mentor, you don't need any other coaching, right? All you need is this thing I've just given you guys for free, right? So make sure you take full advantage of it, okay? Make sure you take advantage of it as much as possible, right? Take much advantage of it. So without wasting much of time, just go and backtest this thing and just come back with results. So I wish you guys all the best. All I want is positive results. Thank you guys. And please share this video, right? Share this video. Like, I really want a massive result this year, right? I want success of everybody, right? So share this video, refer to friends, anybody at all. Just make sure that you guys enjoy this video together. Don't be stingy, don't hide anything. The market is free, you are free to make your money, so don't hide information. Just go on with it, right? Bless up.